Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report from Xcel Brands, and trust me, it involves a move that's a bit like rearranging deck chairs on the Titanic. Get ready for some financial maneuvering that might just leave you scratching your head. Today we're going to look at a report called an 8K. Companies use these to tell investors about big important events. In this case, Xcel Brands filed this report because they changed something important about their stock. The big news here is something called a reverse stock split. Think of it like this. If you have 10 slices of pizza and then suddenly you only have one big slice that's the same amount of pizza, that's kind of what they did with their stock. On March 12, the company's owners, called stockholders, gave the company's leaders, called the board of directors, permission to do a reverse stock split. This means they could take a bunch of shares of stock and turn them into fewer shares. They could choose any number between 2 and 10 to 1. After a meeting, the leaders decided to do a 10 to 1 reverse split. So what does this really mean? Well, if you owned 10 shares of Xcel brand stock, after this split you only own 1 share. The company did this by changing their official company papers with the state of Delaware. The change happened late in March. Starting in late March, the stock start symbol, which is like its nickname, XLB, stayed the same, but the stock got a new ID number. Let's break this down. For every 10 shares you had, they became 1, but what if you didn't have exactly 10 shares? What if you had 11? Well, you don't get part of a share. Instead, they give you cash for that tiny piece. The cash amount is based on the stock price just before the change happened, multiplied by the number of shares you had. Also, any stock options or warrants, which are like coupons to buy stock later, were changed too. The number of shares you can buy with those coupons changed, and so did the price you have to pay to buy them. If you own shares through a broker like Fidelity or Robinhood, you don't have to do anything. They automatically adjusted your account to show the new number of shares. Xcel Brands used a company called Continental Stock Transfer to help with the reverse stock split. So why did they do this? One big reason is that the Nasdaq, which is a stock market, has a rule that a stock price has to stay above $1. Xcel Brands was having trouble keeping its stock price above that level. This change to the company's rules is important. If you want to read all the details, you can find the official change document attached to this report. In other news, the company put out a press release to tell everyone about this reverse stock split. Companies often include warnings about the future. These are called forward-looking statements. Basically, they're saying we're making guesses about what will happen, but things could change. They said they don't plan to update these guesses unless they have to by law. Let's talk about what this all means. It looks like Xcel Brands had to do something to keep its stock listed on the Nasdaq. This reverse stock split is like a band-aid. It makes the stock price look higher, but it doesn't change the real value of the company. It is very important to know that these moves are sometimes done by companies that aren't doing well, to try and seem stronger than they are. Now, for my take on all of this, I would say Xcel Brands is in a tough spot. On the bright side, they are still listed on the Nasdaq. On the other hand, they had to do something drastic to stay there. This might scare off some investors. A big risk is that the reverse stock split doesn't fix the real problem. If the company doesn't start making more money, the stock price could fall again. I think it is necessary to watch them closely to see if they can turn things around. But as of now, it seems like Xcel Brand is not in great shape. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.